Good morning, everybody, and welcome to Tuesday Training. I hope you're having a fantastic week. As always,
we are live from Austin, Texas, right here at Insurance Syndicate headquarters, and man, we have a great show for you.
Good morning. What is happening, man? Hope you guys are doing fantastic on this Tuesday. You might notice a little different backdrop. I am not in my office today. I am still working from my home office because we still got a whole bunch of remodeling that we're doing. Kitchen cabinets, new floors, new patio. Some of it you've probably seen on Facebook. So with all these people coming and going at the house, I've been hanging out here working from home. And well, I'd be lying if I didn't say I wasn't enjoying a little bit. It's kind of nice to be at the house doing my thing. But anyway, man, we got a killer show lined up for you guys today. I don't have any news, not that there's any shortage of it. I just haven't had a chance to tackle some of the big news that's come out. You probably saw some of the stir yesterday with CMS's announcement regarding some of the adjustments they're doing on PDP plans. They are basically reducing the subsidy, which pretty much means PDP plans are going to go up again in premium, right? We're probably going to see some co-payment structure change here and there of some sort, maybe some formulary changes. I'm not sure. I know Norma Johnson was talking about it quite a bit in a couple of the groups. You can check out some of her comments. But I would definitely be diving into it. We'll cover some of that on next week's show. But today we have a special guest that I'm super excited to bring on. I haven't really had a chance to interface with this guy too much other than virtually in Facebook and some of the different groups. But he is an absolute superstar in the Medicare space. He's out just outside of Richmond, Virginia. Dude focuses on the turning 65 market, does a lot of seminar marketing to bring in his people. And the main reason I am bringing him on, there was a conversation, I believe it was in the Medicare Monsters group, regarding hospital indemnity. And he had commented that he has an extremely high attachment rate on his hospital indemnity products to his MA sales, obviously, which is super important. And it should be no surprise to us as good agents, if you're paying attention to everything that's going on out there, that hospital indemnity is going to continue to grow and become more and more important. I apologize for all you California agents that don't have access to hospital indemnity products. You need to go talk to your governor about that and get some of that shit fixed. But for most of you guys in the regular states out there, you're going to have access to multiple different hospital indemnity products that you can include with your MA plans to offset a lot of those costs, whether it's the hospital cost, the ambulance cost, skilled nursing cost. You can put some cancer on there. You can put drug rebates in some of these different plans that are out there for ancillary products. So if you're not talking about them, if you're not incorporating them into whether you're bundling it or you're doing it on the back end with the secondary call or sale process, you really need to be doing it. And that's what we're going to be talking about. So do me a solid and give me a nice little virtual welcome for Mr. Travis Lane. First time on the show. What's going on, Travis?
Not much, Tony. How are you doing, man?
Man, I'm doing really well. I appreciate you taking some time to hang out with us and coach up the audience a bit. You're new to the syndicate some, so if you don't mind, just take a short moment. I know I kind of told them a little bit about you, but just kind of introduce yourself real quick. Tell them who you are and what you're about.
Yeah, my name is Travis Lane. Like you said, I'm out of Richmond, Virginia area, about 45 minutes west in a small little town called Amelia. Been doing insurance I've been licensed since 2016, consistent with it for about 5 years now. Done a lot of different marketing and such, but like you had touched on, I do a lot of turning 65, a lot of seminars now, and Medicare is just the main focus, but we do a lot of stuff obviously in the life and health market, but turning 65 is the go-to now.
Absolutely. How'd you get into insurance?
My dad, actually, he's been in the industry for 38 years, I believe. And yeah, so after college, had a couple, odd end jobs, ended up working with him, 2 years after graduating, and pretty much the rest is history. So
is he also in the Medicare space?
Medicare and then retirement planning and such.
Okay, cool.
Yeah, he actually works out of the office with us. So a couple doors down.
You mentioned that you were licensed since 2016, but you're a little more consistent in the last 5 years.
Yep.
You mind expanding on that a little bit? Does something just kind of keep you from diving all in, or?
I dove all in and then kind of had to come out because I spent a lot of money, didn't have good mentorship, and kind of like a lot of agents, if you don't have good mentorship, you just leave. So
Yeah,
I lost a lot of money and came back. I never said that I failed because I came back and actually am succeeding now. So, took
excellent.
a probably 2-year hiatus and came back the end of 2020 and really been rocking it ever since.
Right on. And if you said you do a lot of seminars, so I assume you're probably selling mostly face to face in that regards.
Mostly face to face, a little bit of phone sales, if someone wants to just do it over the phone, but typically a lot
Yeah,
of face to face here in the office.
right on. What before we dive into some of the hospital indemnity stuff, what are some of the challenges that you found in going and targeting the turning 65 market specifically?
Biggest is expense. It's expense and then just kind of waiting. You're probably waiting anywhere from 6 to 12 months before you can write a lot of the business, unless you cross sell hips or something like that. But it's just a big upfront expense, and just kind of the waiting game. So unless you have a lot of money in the bank, it's gonna be kind of hard to dive right into. You
Yeah,
can
no,
transition,
absolutely.
but yeah,
We were talking about a little bit about that backstage. Like if you're an agent, you're gonna market to T65s. If you're any good at it, you're gonna have to market 6 to 12 months in front of their T65th birthday, which means you're spending marketing money or elbow grease or effort 6 months to a year before you ever see any ROI. So for a lot of agents, especially if you're new to the business, like that's almost impossible. Like you have to have some money to be able to invest and be willing to invest in that.
right. Or just put a lot of money on credit,
First
a
part,
lot of
yeah,
it on credit.
100%. Which we certainly did over here getting Grace's
Yep.
business started.
I,
Ran
I
up some
hear you.
credit cards to get it rolling, but then that's part of it. But
That's right.
if you know the math, like, and that was one of the fortunate things when we started Grace's business, like I understood the math already. So I knew that we could roll into that with blind. Like she was nervous, but I was like, you don't have to worry about it. Like we're going to spend this money, but then eventually you're going to have all these people that are your customers and it's going to pay it all back and plus residuals, yada, yada, yada. So
That's right. That's right.
she has really enjoyed seeing that come to fruition in her business, like really seeing the renewals stack up, seeing the growth. And sometimes, even if you know the math, it gets shocking sometimes if you're consistently building and you get to that third year, that fourth year, and like, holy crap, those are my deposits this month. Like that's pretty
Right.
solid. I thought I was pretty good at math, but that's a lot more money than I expected. Right on. Well, man, as I mentioned when I opened the show, like I want to talk to you a lot about hospital indemnity. You're selling hospital indemnity. You're very successful at it, and I know a lot of agents when they're cross selling, whether it's hospital indemnity, cancer, life insurance, whatever it is. The key metric that they're talking about is their attachment rate, right?
Mhm.
Like how many ancillary products or how often am I getting an ancillary product with my core product?
Mhm.
I feel like even just that concept in general is something that a lot of agents struggle with is understanding like, hey, you have a core product, which is either Medicare Advantage or Medicare Supplement, but then you have all of these ancillary products to choose from. And it, who was that? I was talking to Hunter Gordy of United National Life, and I wish I could remember the exact fractional number that he told me of agents that actually sell hospital indemnity products or how many hospital indemnity products are getting sold to the 64 million Medicare beneficiaries. The number was so incredibly low that it
I
was
believe it.
mind boggling to me. Like it really just blew my mind. Um, so what do you think an agent's hesitation is on bringing up a second product, number one?
Um, I mean, if you're selling Medicare Advantage, it's a $0 product, pretty easy to sell.
Yeah.
Then you're asking people, oh, you got to spend 20, 30, 40, 50, $60 a month, whatever you're doing. And maybe that kind of hinders them from bringing it up. I know from personal experience, it's really been over the last year that I started offering them.
Okay.
I've always offered them, but I never really asked, or mentioned the product. Did it every now and again. Did it with, a lot of turning 65, obviously. But before that, I was doing a lot of low income subsidy leads, dual market. So I think it depends on the market a little bit for what you're cross selling in general. But, um, it's, yeah, it's a lot of people, I guess, shy away from you got to ask for money. You got to ask for a premium product now.
Yeah. I mean, there's definitely a difference in advising someone on the right Medicare Advantage plan. There's no exchange in premium. And even if you wrote them a Medicare Advantage plan that had premium, it's not like you have to collect the check because all that's going to be managed on the back end. But then making that transition to actually selling premium dollars. And I've talked to my agents heavily, especially the newer ones, because they get into that groove with Medicare Advantage plans. Like, this is great. I'm good. I'm ripping plans. And I'm like, hey, that's great. Now you've got that covered. Now we have to focus on learning to sell premium. And the biggest reason I push on it is not just because it's going to improve your commissions. It's going to tighten up the retention on your business, because the more products you sell to someone, the more sticky they become. But ultimately, that is a transferable skill. Learning to sell premium dollars, learning to get people to write you a check, learning to get people to agree to pay you money, right? Or buy a product that does cost money, whether you're having to get banking info or they're physically writing you a check, whatever it is. That is a transferable skill that doesn't exist in just selling Medicare Advantage plans, right?
That's right.
And I can expand that a little more. People are like, I don't really understand what you mean. Let's just pretend, for example, that Medicare Advantage plans got taken away from you and you could never write them again. And
That's
your only
okay.
other option was to go out and write premium. Well, if you hadn't learned how to do it already, you're going to struggle really hard in going out and asking for premium dollars.
Yeah, I 100% agree. And I feel like a lot of people are worried about that right now on the Medicare Advantage, about commissions, non-commission, and sell hospital indemnity and any other ancillary. You're going to be fine.
Absolutely. I mean, when I got into the business in 2004, there were no Medicare Advantage plans. Everybody just had original Medicare, and all we were selling was supplementary insurance. We weren't selling any major medical plans. We were selling Medicare supplements. We were selling maybe some dental, some final expense, and some cancer. Those were really the only products we could sell. Now, fast forward, and there's a grotesque number of or assortment of products that we can choose from, between hospital indemnity, home health care, short-term care, dental, vision, all these different products that are out there that you can either bundle in or pitch to your clients. It's nuts. And then if we, again, I'm going to go back, like if we look at the trends that are happening, Medicare Advantage enrollments already crossed the 51% threshold, right? We're about 2 years ahead of their original predictions on when they thought we would cross 51%. So it's growing faster than they even predicted. It's not going to slow down. I mean, they got another big fat subsidy increase this year, which I don't think is going to blow up footprint like it has in previous years, because they're definitely tightening down on reporting requirements, the abilities to throw in all these different sizzle benefits. So we're going to see things like supplementary benefits probably shrink, but we will see some footprint growth again, I think, this year. But then also, if, like I opened up when we're talking about the PDP stuff, like the fact that PDP costs are going to continue to go up, Medicare supplement premiums are continuing to go up again, more and more. It's going to push more people to MAPD. So if we're going to get an even higher penetration rate on MAPD, as an agent, you absolutely have to learn to include hospital indemnity into your presentation, period. Like, I feel like it's an absolute must at this point. You had mentioned it took you a little bit. What was your hesitation before you started selling some HI products?
I think it was just like probably most agents in general. Okay, sell, get the Medicare application, just move on to the next one. And it was leaving money on the table kind of thing. And also leaving gaps in their coverage, not really realizing that we were doing that or that I was doing that.
Right.
So it was just kind of the mindset of, okay, I'm doing Medicare, let's add in hospital indemnity. Started doing that, got pretty good at that. And then I was like, all right, now I got to do cancer because I can't sell cancer for whatever reason. Now we're good at that. You know, I think we sell more cancer and heart attack, stroke more than hospital indemnity now.
Okay.
So, but with hospital indemnity, that was like the first cross sells. Like, this makes just the most sense. We're doing Medicare Advantage. There's a lot of holes in their plan. Let's do hospital indemnity. So it's just a mindset switch, I feel like.
Yeah, absolutely. I mean, they line up perfect. I mean, the three biggest gaps that are in an MA plan is obviously the hospital stays, the 20% on Part B, and then your skilled nursing, right? And then pretty much any decent hospital indemnity plan out there gives you the ability to plug all three of those holes, as well as some extras. When are you normally bringing up hospital indemnity to your prospects?
So with mine, with it being T65, doing a lot of seminars, we're already talking about it a little bit in the seminar. So they already know a
Okay.
little bit about it while they're getting educated. We either sit down in person, over the phone, whatever it is. I go through a needs assessment, talk about, kind of what their plan looks like now through their group or their spouse or whatever they've got, their ACA, what their income is, what their budget is, all that stuff there. And then once we're going through, if they say, okay, we're going Medicare Advantage, that's where I want to go, then we're talking about the Medicare Advantage. And if I'm in person, I'm pulling it up side by side with the Advantage and the hospital indemnity to show them these are the holes. This is what we're going to do to cover it up. And that just makes so much sense to people when they're seeing it as, oh, I got to pay that, but I get that back. I pay this, but I get that back. And it's been a game changer doing it that way.
Makes a
So I'm
lot of sense.
doing it in the actual needs assessment process.
Okay. Is there ever times where maybe you have a client that you've already sold an MAPD plan, they didn't buy the hospital indemnity plan, and then you're calling them back or you're following up with them
We
and
definitely
hitting it
are.
again?
Yep.
How
So
do you bring up that conversation?
that would have been probably last fall, really during AEP. It was okay. I hadn't sold a lot of hospital indemnity during that time before. So during AEP, it was calling, just touching base with clients. Hey, we good? We need to make a change, whatever the case is. No, we're good. Hey, we never really talked about a hospital indemnity plan. Let me explain how that's going to help you. And then we would probably do a lot of Medico during that time because it was a lot of guarantee issue for folks that may be
Hmm.
unhealthy or whatever the case is. So that was kind of the first toe dip, I guess, if you will, with previous clients that I never sold. Is hey, during AEP, that's when I was actually pitching that product to folks. And it made a lot of sense because, hey, you've got these holes. I didn't tell you that we have this product that we can fill those gaps, and then just selling it that way.
Sure. Okay. Curious, have you come full circle with any of your clients where they've actually used their
Oh
hospital
yeah,
indemnity plan?
yeah, sure have all the time. So
Right.
I have been a one-man shop up until May. I actually hired my first in-person admin customer service rep, so she's actually helping me with that. We have a lot of claims we process every week, just from selling them the last 6 to 12 months. It's been pretty crazy that every day or every week rather we're getting calls about, hey, we went to the hospital, I got this bill, or I went to the ER, got this bill. Hey, we just incurred cancer. What do we do with it? So it's crazy how fast those things actually turn around and they're using them.
Absolutely. Has just curious, has any of your clients given you any specific feedback post using their HI plan?
Um, they all love getting the money back, so they're all happy with it. No one's actually been pissed.
Right.
So that's obviously a good thing is, hey, this is a product I'm telling you about, you're getting money back, and they see that and they're thankful that they've had it.
Absolutely.
I've seen some of the bills. I mean, you're talking $2,000, $3,000 that people are getting refunded or reimbursed.
Yeah, absolutely, man. When you're pitching a hospital indemnity product, I'm curious, do you just strictly go, here's your MA plan, here's how this product matches up to cover all those gaps, that's it? Do you do maybe a good, better, best? Hey, we have this option, this option, this option. I'm just kind of curious in your presentation on it, or maybe what benefits in the hospital indemnity plan that you enjoy customizing and building out your package.
Yeah, so I do a lot of Bankers Fidelity. It's in my opinion one of the more customizable ones out there compared to some of the other ones. So when I go through it, I do a daily benefit amount, obviously. I do a lump sum benefit amount, but I have kind of a base plan that I do just from experience. I try to keep it around um, 45 to $50 on average. And then I'll add in a couple things for skilled nursing if that's important to them, or outpatient surgeries or whatnot, some of the add-ons on that particular plan. But I don't want to undershoot myself because I've done that plenty of times where it's, 10, 20, $30 a month and it maybe not cover them fully. So kind of the sweet spot I found is anywhere from 40 to $50 and then really 60 to 70 on the higher end, depending on the client.
Yeah.
So, I mean, I've noticed a lot of clients that do go MA, as I'm sure you have and a lot of people have, is they're more price conscious. So I don't want to sell this, 200 some dollar hospital plan. It's like, well, why don't you just go supplement
Yeah.
at that point?
Yeah. Just might have supplement. Absolutely.
Right. So that's just kind of what I do, but it's kind of a base program that I've kind of built out, kind of found the sweet spot, and then I'll add in some additional riders depending on what they tell me is important to them. So I
Makes
don't do the
sense.
good, better, best. It's kind of a preset, and then I'll kind of adjust accordingly if I need to.
Makes sense. I like that. And I like the price mark too. Usually when I am cross marketing just about any product, whether it's hospital indemnity, final expense, home health care, cancer even, I'm always shooting in that same range, that 40 to 50, because I feel like $50 is like the new $20,
Yeah.
right? It's
Yeah.
it's enough, but it's not so much that people are like, I can't afford $50. Like it's the new $20 bill is the 50 for the
Right.
most part. So I feel like that's super affordable. And if you break that down and do some math, like that's less than a cup of Dunkin' Donuts coffee every day. Like that's a
Right.
super
Yes.
cheap bill.
It's really not bad, and it's going to pay out when you need it. Like
Right.
it's going to be used at some point for something.
So I'm curious, and I don't want to put you too much on the spot here,
Okay.
but this was the reason that we kind of connect on this call. People were talking about attachment rate
Yep.
in Medicare Monsters, and you quoted a pretty darn high attachment rate,
Hmm.
like
I did.
super high.
I did.
Why or what is your attachment rate, and why is it so high?
I said I think in there 90 to 95%. And I stand behind that because we do a lot of T65. It is
Hmm.
just a process. And it wasn't something that I just like learned. I have learned over the years, and I've had some pretty great mentors. So they have taught me how to actually attach these things. Um, it's just in the presentation that we're doing with Turning 65, they're already seeing it. They're seeing it again, the needs assessment, and then they're seeing it again in the actual pitch. So it's already embedded in the whole process from start to finish. Um, Again, we're doing hospital indemnity for people that are only, on Medicare Advantage programs. I would say over the last month, we've had probably two people that did MA that did not go hospital indemnity. Like it's just, I'm not selling a hospital indemnity or a Medicare Advantage plan without a hospital indemnity. I tell them like, we never recommend not doing this with a Medicare Advantage because of the out-of-pocket expenses.
Absolutely.
It just makes too much sense. But we're also getting their budget in mind as well. Okay, so what are they spending now on their healthcare? Again, their group plan, their ACA. Now we're talking about Medicare. We're building it out. We're trying to match the budget that they're already spending. So then it's, well, I'm already spending that money. I can just add in the hospital indemnity, and it's a no-brainer.
You said they're already spending that money. Are you talking about people coming like from the group space?
Yes. Yep.
Okay.
From the group space.
Expand on that a little more because I feel like that's a concept that a lot of agents just completely overlook.
Yep. So we want to know what they're spending per month on their group plan, what their deductible is, their out of pocket, just pretty much all the nuts and bolts of their current plan. So that way I have an idea, okay, they're spending $400 a month. Okay, I know they can pretty much afford a lot of different ancillary products that are going to close the gaps on their supplement or MA plan, whatever it is. But also it gives me just an idea of really the sweet spot, because if they're spending that now, we're good. If we go over that, we might have a problem, but if we're under that, we're still good. But obviously they're probably retiring, going on a fixed income, so we got to keep that in mind too. But just having that, I wasn't doing that probably 6 months ago. That's something new that I've
Okay.
learned from some mentors. How
Yeah,
to kind of position that.
absolutely.
So once you know what they're spending, you're kind of in a good position there.
You're in a huge position.
Mhm.
And you have to also like, and I know you know this, but some of you guys that are listening, like you have to think, what are all the benefits that they're losing at the company, their employer, and their group coverage when they flip to Medicare? They're not just losing health coverage, right? They're probably losing life insurance. They're probably
Mhm.
losing their work site benefits, cancer, heart, stroke, accident type plans, right? They're losing a lot of these things that honestly, as they're getting older, are even more important than they were during their working years,
Mhm.
right? Things like accident plans, et cetera. So, and then again, looking at their budget. And I assume when you're looking at their budget, you're including the Part B premium in there as well
I
as
am,
part of
yes.
that $400, right?
Yep.
And that's been one of my, I don't know what to call it, secret, all right, but one of my success points has been taking those people that are in group, finding out what they're spending, and then just presenting them a bundled package right up front that includes the Part B premium, but is still just just enough underneath the
Mhm.
price point they were getting, and technically is most
Better
likely
coverage.
way better coverage, better
Yeah.
benefits. And they look at it, they're like, are you shitting me? Like it's that good? And yes, it is. Now, no,
Yeah.
it's like not like that in every state. And like, so even when I open this, like some of you guys that are watching, like I see Franco in here out in California, like he has almost no ancillary products to sell. He can pretty much sell an MAPD and some final expense. There's no cancer. There's no hospital indemnity. There's nothing out there. So I feel for some of you guys that would love to cover your clients better. But I don't know what it is with California, man. They want, if you get cancer in California, they want you to be on Medi-Cal. And that is pretty much how it's going to go for you. It's wild. When you're writing or when you're presenting it, you're presenting obviously the MAPD and the hospital indemnity right up front, and you're writing all that in one sale face to face, right?
Certainly am. Yep.
Right on. What if you don't mind me asking, like, what are some products that you've sold that you really enjoy selling that you would probably recommend agents take a look at?
I've kind of taken a liking to the Aetna products for cancer, heart attack, stroke. I just kind of bundle that into one program. It's easy. It's one app for two different applications, but under one application that you write, or two different products under one application. You can do a hospital indemnity with it, recovery care for the short-term care. Done a little bit of those this year. Had never done those previously, but I like the ease of use on that, and it's instant decision on a lot of that stuff. So that's nice to see as well. But just ease of use is probably why I use them the most for the cancer, heart attack, stroke anyway. But that's kind of my number one. Just I actually believe in the cancer policies more than anything else that we sell.
Okay.
Just because I've seen it from family members or friends, just a lot of people are getting cancer. It's
100%.
almost 50%.
I just lost a good friend of mine. I'm 50. He's 40, 45, 46. He just passed from cancer. Like, I was blown away. I knew he was struggling with it, but he would never let you know that he was, like his Facebook profile and everything. Like, he never talked about the fact that he was dying from cancer. He was always out fishing on his boat or doing whatever. And then all of a sudden I got a notice like, yeah, no, Aubrey's gone. I have other friends that I've already lost from high school that it's just way too young. Like, people dying in their 40s from cancer is blowing my mind, but it is
Dude, I'm
happening.
33. I just had one of my friends from high school pass away this year.
Right. I was at a birthday party many years ago, and this lady was 50 years old. She was throwing her 50th birthday party, but it was also kind of a celebration because she had recovered, was a cancer survivor, was now cancer-free, etc. And she did a balloon release. And there was a shitload of people. She probably had 200 people at her party, easily, maybe more. And she started talking about, her own story. And she's like, everybody in this group, if you know anyone, friend or family member, that's ever dealt with cancer, please stand up. 95% of the entire room stood up. And then everybody came and got a balloon, and we did a giant balloon release.
That's nuts.
Everybody knows it's there. Just about everybody's been touched by it in some way. I lost my grandmother to cancer. I've lost friends already to cancer. My wife has lost her mom to cancer. So, I mean, it's easy to talk about. I mean, it's hard to talk about because nobody wants to talk about cancer, but it's easy to find stories to tell in the cancer world, right? And it's easy just to ask that question. And that's one of the ways I talk about it. I'm like, you probably, like, I throw it out there. Matter of fact, like, you probably know someone that's even been touched by cancer. And then they open up. They're like, yeah, lost so-and-so, lost so-and-so. My friend's battling it. My best friend, my girlfriend, whatever, all dealing with it. So when you're bringing cancer up or when you pitch it, like, how are you transitioning into that?
Yep. So it's in the needs assessment. It's in the presentation. It's in the needs assessment. So it's just a question on there that talks about, have you had any family history with cancer, heart attack, stroke? Do you know anybody that's dealt with that? How did they pay for that? How did that affect them? Whatever the case is, noting that on the needs assessment. And then when I'm pitching the products, I'm bundling it all in of their Medicare plan, their hospital indemnity, and hey, here's a $15,000 cancer plan to cover the out-of-pocket expenses on the Medicare plan that we just talked about. And it's it's $300 a month.
Right.
Sign me up. We just do all 3 applications or 4, whatever it was.
Absolutely. And I assume you're doing lump sum cancer, right?
Yes. Lump sum cancer.
Absolutely.
Yep.
You give them the freedom of choice. Like, those treatment plans can be good. And I grew up in the business selling cancer treatment products door to door. I mean, they're nice, but you have so many more restrictions in them because that's only going to cover the benefits that treatment plan approves. It's only going
Right.
to give you the benefit amount for that specific treatment. You only get paid when you use it. Whereas a lump sum product, I'm going to get one fat check. I can spend it however I want.
That's right.
I really appreciate your attitude towards bundling all the products up front, right? And how I'm going through the needs assessment and I'm showing them a healthcare package of my design, right? And presenting it to them based on their budget. How, other than the needs assessment, how are you presenting that? I'm just kind of curious.
What do you mean?
When you're like, you've done a needs assessment, let's say you find some trigger points where you know they probably want an MA plan, right? They've kind of gone that route.
Yep.
And you feel confident you're going to be able to bundle in hospital indemnity, maybe some extra cancer insurance or whatever you're looking for. I'm just kind of curious, when it comes down to sitting down, like, how are you presenting your customized bundle package to them?
Oh, gotcha. So if I take the guy from yesterday, we did go through supplement and advantage, and I wrote down prices for both routes. But we'll basically just talk about, the Part B is going to be 185, $0 a month for your Humana program here. You're actually going to get a give back on that. We're going to take some of the give back and we're going to put it towards your hospital indemnity plan, $61 a month. And then here is your $15,000 cancer program that was, I think it was like $30 a month or something. So we just talk about the pricing like that in the bundle. I do go through the pricing, just to make sure they know exactly what they're paying for. And then, hey, it's $300 a month or whatever it ends up being. But if you're talking about like presenting the product, how it's going to cover them, I do exactly what you were talking about is, hey, this is a lump sum cancer benefit check, $15,000 gets mailed to you. What we do is ask for the pathology report that you're going to get, send it to us. We'll submit the claim for you so that you don't have to do any of that stuff on your side. Once you get the check, it goes, to you directly. There's, nothing that you can't use it for. It's your money. If you want to use it for cancer treatments, if you want to use it for medication cost, God forbid it's terminal, you want to go to a trip to Hawaii, you can use that money. The only thing I ask is you take me with you. So just kind of making some lighthearted jokes in there, just so they're still listening. But yeah, just kind of explaining it that way.
Makes sense completely. I do. It's with my T65s, especially face to face. I'm really good on the bundle. It's a little harder on the phone because you have to force them to write the items down that you want to present. But I go through it real similar where I basically just list out, hey, look, I just want to remind you, here's what your core Medicare plan A and B gives you, right? And I stress all the gaps. And like, what I can do is, here's what we're going to do. We're going to put you on the Medicare supplement, drug plan, dental plan, home health care, cancer, bundle it all up, give them the drive out price. I love that pitch because so many things, especially things that are regularly revolving payments, cars, homes, recreational items, whatever it may be, and certainly insurance, something that you're like, okay, I need to go buy this. It's a heavier expense. How much can I budget for that every month? And what is in my budget plan, right? People think about those larger purchases that way. And I truly believe insurance falls in that category. Like when someone buys a car, as an example, they're buying it based on unless they're loaded and they're just going to go buy it for cash or something. If you're going to finance a car, you're buying it other than what you love about the car. You're buying it based on that bottom dollar. What's it going to cost me every single month for the car plus the insurance on the car, right? What is my bottom line? When I started bundling products and looking at it at that bottom line, like, here's how much your insurance package is going to cost every month. Does that fit your budget? Yes, that's well inside my budget. Perfect, right? Just need a few minutes to knock out these applications. When you kind of made a transition and started doing that more, have you found, like, as you found kind of a similar experience? Have you anything new that you discovered in kind of making that pivot where, man, because you mentioned you were doing some of this before, but in the last year, you've really buckled down on it, right? And seen the fruition. Like when you get to that portion, are you kind of noticing that same deal where people are like, oh yeah, that's what it's going to cost me every month? Cool. And they're not necessarily as interested in every single line item. They're like, okay, cool. This is a healthcare package. That's my budget. Perfect.
Yeah. When I was just starting out doing the packaging, it was, I don't know, it was like $450 for one of them. And I just stopped and shut up and just waited for the person. And I think it was a lady, and she's like, "Okay, sign me up." I was like, thinking to myself, like, "Are you sure? Like, are you serious?" So yeah, it's just crazy when you position it that way, when you bundle it, and you're like, "It's going to be X amount of dollars," and they're like, "Okay,"
Yeah,
like it's second nature now.
absolutely. Absolutely. And especially if you have someone coming from group or even Obamacare, like if they weren't getting great subsidies under
Oh,
an
for sure.
ACA plan, right? They're spending a lot more than that.
Yeah.
So if you're able to show them, like, look, I can come in under your current expense and give you more coverage, like it seems to be a no brainer. I think there's just a lot of agents that they're either fearful to do that, um, or they just haven't been taught. One of the two. I'm not sure.
Or
But I
both.
remember, yeah, or both. When I made that pivot, like I noticed a huge difference in the number of apps I was selling per client. Like now, anytime, and I don't sell regularly, I'm generally just running my agency. But when I do get referrals and I do sell, I 100% sell in that fashion. And I usually get minimum 3 apps a client. And it's not uncommon to get 4, 5, or even 6, depending on what their needs and what they're really looking for is. And that's usually more for the Medicare supplement folks because they're going to
Mhm.
need more anyway. They have to get a dental app, vision app, et cetera, et cetera. One more question I want to ask you, and we'll start to wrap this up. Because again, you said, hey, I've been kind of selling it, but it's been in the last year that I really kind of started pushing it more.
Mhm.
What's the biggest difference you've noticed since you started really making sure that in every pitch, I'm including these extra products, I'm talking about them, I'm doing a great needs assessment so that I can position them correctly and get those sell? What's probably the biggest difference you've noticed in your business?
Um, I guess there's a lot of different factors that have kind of led into this, but I feel like I get a lot more referrals. People are happier that they're covered better. Um, Obviously, because I'm doing T65, it does help with cash flow, helping more people with more policies. You're getting more upfront cash to be able to put into more seminars or whatever you're doing for marketing. Um, Even if they're not turning 65 for 12 months, we're still positioning some sort of a cross sell attachment to them.
Mm-hmm.
Or if they're not retiring for 5 years, whatever the case is, we're still, hey, here's holes in your plan. So I think it's also made me more confident in what I'm doing. Um, just being able to help more people in different ways than just, hey, here's your Medicare Advantage plan or here's your Medicare supplement plan. That's all. Yep, that's it. See ya. No, it's, hey, here's the gaps that I didn't tell before because I just wasn't doing it correctly. I wasn't fully investing into the client. So now that we are, um, I would say it's helping everybody. It's helping us, it's helping the client. They're happier, they're covered better. So I've seen that difference in the last, like I said, 12. I mean, I've been doing seminars for the past 12, 13 months now consistently.
Right. If you had to guess, and I don't want to put you too much on the spot, you're welcome to just kind of fudge this number a little bit. But what kind of growth have you seen in revenue since you started really working
Um,
hard to make sure that you're positioning secondary products?
Growth wise, because I keep spreadsheets, I gotta find my spreadsheet. We are right at, I think, almost 190,000 in revenue this year. And I think last year we capped out at 209. So we're definitely growing in the right direction. We still got 5 months of the year left. So
Right.
we're doing pretty good.
Absolutely. Because the way I look at it, like, and I remember, Joshua Lustig, I'm sure,
Hmm.
right?
Yep, of
Legend in the
course.
business at this point. I remember talking to him, and he was writing. This is when he was still actively just writing himself all the time. He was writing about 50 Medicare supplements a month by phone.
Hmm.
And that's pretty much all he was selling. He was just ripping med sup plans and drug plans over and over and over. And then he finally started adding dental into his pitch. And he said he saw his commissions jump about 37% just by bringing up a second product. He's like,
Hmm.
I'm not necessarily selling it to every single person. Not everybody needs it or wants it. But because I'm willing to now just say it to every single person I'm selling a Medicare supplement to, a bunch of them buy it.
Yep.
Like, you don't even have to be a superstar salesperson. Just ask them like, hey, how are your teeth? You need some dental insurance too? Like something, it can be that easy. He's like, and I noticed our commissions jumped up 37% super quick. And this is a thing that I harp on for agents. And it's even more important if you are in the T65 space. Because if you can get your attachment rate, even if you are not as great at it, and let's say you're only getting maybe a 30% attachment rate. So for every 10 MAs, you're getting 3 HI products, right? That's at least an extra, probably what, $1,000 to $1,200 in commissions for every 10 of those apps.
Yep.
Easily. So I mean, it's a huge jump. I want to circle back because you mentioned something that I think a lot of agents overlook, and this takes some stones, in my opinion. You had mentioned like, hey, I'm talking to someone, maybe they're 65 years old, but they're still working.
Mm-hmm.
They're not ready to flip to Medicare yet. And you're still finding a way to but you're still finding a way to get into the door and be like, hey,
Yep.
I know we're not ready for Medicare yet. We're still going to stick with that group plan, but here's some issues that group plan has that I can help you sew up as we get closer to that transition. What are some of the products that you're generally selling to those people?
Hospital indemnity, because they're still having out-of-pocket expenses.
Yep.
And then again, cancer and or heart attack, stroke. That's, again, I think it also helps if you believe in the product. You're going to position it, you're going to sell it more.
You got to believe in it.
So because I believe in the cancer and the heart attack, policies a lot more. I mean, obviously hospital indemnity is great, but I believe in this because I've seen stuff firsthand. I sell more cancer. I sell more hospital or heart attack, stroke. It's just because I believe in it. So
right.
I think that matters. But yeah, I mean, we're definitely doing that for folks that are not retiring yet, or they're, turning 65 in 12 months. Okay, let's protect you now, the exposures that you're facing. So again, I wasn't doing that up until the last 6 months, 12 months or so. I learned a lot of that from Chase Gruning. I mean, I'm sure a lot of you guys know him, joined his group and really was able to pull out a lot of the presentation and the cross sell from that. So that's definitely helped me position everything the way that I'm doing it now.
That's great for at least 3 levels. Like, number one, you're taking better care of someone and protecting them. Number two, you're locking them in as a client now. So now you have full permission to contact anytime you want. You don't have to go back through a lead generation mechanism to get that person back in your funnel. You already have them, right? They've already built a relationship with you. So now when that time comes that they're transitioning,
they're going to come back.
They're going to come right back to you, the guy that already cares for me.
Yep.
100%.
So it's
when did you start doing that? Was there a little light bulb moment that happened? You're like, okay, this person's not going to retire for another year. So they're only taking part A, they're delaying part B, but I got to look at their group plan and I see some gaps. Like, when did you finally be like, you know what? I'm just going to ask this dude if he wants some hospital indemnity to go with this.
Shoot, probably last like 3-4 months.
Okay.
My process with the seminars has changed over the last 12 months, like drastically. So when I first started doing it, it was okay. I'm going to wait 3 months before they're turning 65. Okay. That was too late. We talked to them, at the seminar, we had automations and all the stuff, but we weren't really reaching out to, okay, now you're in your window. Let's go. I already took care of it. You what? I just met you 6 months ago or whatever it was.
Yeah.
So then it was, okay, let's go 6 months out because you knew some supplements or whatever, cross sell. And then 6 months, it was like still sometimes too late. And then it was like, all right, once we get them in the seminar seat, the next day we're going ahead and calling them to schedule an appointment. I don't care if they're not retiring for 5 years. We can still sell them something. So that has just really progressed and changed over 12 months to where I was waiting too long to now I'm not waiting any time at all. We're trying to figure out what we can do now, if anything at all.
Speed to lead, man.
Yeah.
That's just another example of speed to lead. Like, once you spent the money to get that person in your seminar, and just like you said, they may not be retiring for 6 months, 9 months, a year, 2 years, doesn't matter. Like, you need to call them as soon as you can at the end of that seminar. Even if it's just like, hey, Betty, thank you so much for coming out to the seminar. How did you enjoy it? What did you think? A little more discovery. Like, let them know you're a real human. Let them know you appreciate them. Let them know, hey, I understand you're not retiring for another couple of years. I'd love to talk to you about how some ways we can help you in the interim, but certainly just, keep yourself top of mind for them, because, and you know this already, like they are getting absolutely bombarded. And as agents, sometimes oh, dude, I threw the dopest seminar. Like there's no way they're going to talk to anybody else. And then you don't talk to them for 3 months, 6 months. You're going to think, cool, now let me go get Betty back on the phone because it's time. Like, no. Johnny Brock's already talked to her and got her ready to go. Somebody's already gotten her on the phone.
That's right.
Right? Because there's 111 other agents telephoning them, mailing them, getting in their doorstep, whatever they can do. They will quickly forget about you. Or they might just get confused and be like, oh, yeah, that's the guy. They might, like Johnny Brock calls them and they're like, oh, yeah, that's the guy who's the seminar I went to. That's right.
Yeah.
They just forget. Like shit like that just happens. So you have to get in front of these people and stay in front of them. And it's especially true for us because we're primarily phone sales. So we will talk to people who think that they just talked to us 2 weeks ago. I'm like, no, this is the first conversation we've ever had. We're like, well, no, I talked to you like 2 weeks ago. We were talking about this and that. And like, nah, sorry, Miss Betty, that wasn't us, but we're here now and ready to help, or whatever the case may be. So we see that happen a lot, man.
That's right.
Well, cool, man. I appreciate you taking some time to jump on. If there was one piece of encouragement you could give to an agent who is just out there selling Medicare Advantage and has not made the leap on pitching ancillary products of any sort, whether it's cancer, hospital indemnity, whatever it might be, what advice would you give that person?
Just bring it up on your next appointment. Just mention it and see what happens. Yeah. And it may take a couple different appointments, and eventually it'll just click with somebody and they'll do it, and then it'll just get easier from there.
Absolutely.
You gotta do it.
It's truly that easy. And I know this is a dumb analogy, but I've said this many times. If any of you listening and curious, Travis, you ever worked in the restaurant industry in your life?
I have not, no.
Okay. I've worked in the restaurant industry for a long time while I was going to college, worked in high volume Mexican restaurants. Every good waiter in some of these high volume Mexican restaurants, you know it if you go to them and eat as a patron, they're all asking you if you want guacamole. They're all asking you if you want some chili con queso to go with your drinks or whatever it may be. And that's all they have to say is like, hey, you want any guacamole? It's the exact same concept in here. Hey, we've got this covered. You got some gaps on your hospital. I can show you a really easy way to bring those down to zero. Would you like to check that out? Like, it doesn't have to be hard. I think agents just overcomplicate it. So what you said is perfect. Just bring it up.
Yep.
And even if you suck as a salesperson, but you bring it up to every single person you close an MA sale on, dumb luck is going to get some of them sold just by the law of large numbers, period.
And then eventually you can change your presentation a little bit to actually make it embedded in your process so it makes more sense. But at first, just bring it up. Just ask. Right
on. Well, man, thank you again so much for taking time to jump on the show. I appreciate it.
Appreciate you having me.
Keep doing your thing out there and kicking ass. I'm sure I'll see you at one of the events or sometime on the flip side.
That's right.
But that is it for Tuesday Training Today, guys. We will see you next week. Have an awesome week.
See ya.